Well, good afternoon and welcome, my friends. Yes, it is Tuesday, May the 19th. Robbie Noel sitting in for John Stadtmiller on this Tuesday as he gets ready for the trip to Jekyll Island. And joining me, as he does each and every Tuesday, but we are now the two amigos, Bob Chapman. How you doing, Bob?
Well, fine, thank you, and I'd like to tell everybody that I'd like to thank you for your advice.
Which was what?
I had $100 to win on the girl.
Ah.
And I had a $20 exactor on 13-2.
Well, there you go. Way to go, Bob.
Robbie is the handicapper.
No, she's just a spectacular horse.
There was never any doubt, and she came out of the 13 post and got right into the first three right away.
Yes. I don't think she's going to... if I owned her, I wouldn't run her in the Belmont. I don't think they're going to run her in the Belmont.
I wouldn't either.
Yeah, she was sucking wind at the 8th pole there, so... And besides, I already know what the owner's plans are. Well, I'm assuming I know what the owner's plans are. And the owners of Rachel Alexander also own another stallion by the name of Curlin, who is enjoying his retirement on a breeding farm in Kentucky. And to have Curlin with Rachel Alexander, all I can say is the foals, you could name your price. So the $10 million they paid for Rachel Alexander after the Oaks, they'll get that back in one fell swoop. So that's a problem. That's a problem with fillies, unfortunately. But anyway, Bob, we're not here to talk about horses. Although I would love to spend an hour talking about horses. We are here to unwrap the mystery of finance. And I guess, just to get your take on it, we had the wrap-up of the Bilderberger meeting in Greece over the weekend. And once again, not much coverage, if any coverage at all. What have you heard about it, and what do you make of what could come out of that meeting?
Well, I'm only referring to what Danny Eslin had to say.
Okay.
And I haven't heard anything from Jim Tucker as yet. Eslin says that... Do I hear music?
You hear music, Bob. Way to go, brother.
We'll wait.
Yeah, we took too much time talking about horses.
Nothing wrong with that.
Yeah, nothing at all. I agree, 100%. We're speaking with Bob Chapman from the International Forecaster. We'll take a short break and be right back.
Get ready for Real Talk Radio. You're listening to the National Intel Report with your host, John Stadtmiller.
On this Tuesday, two amigos, John Stadtmiller, preparing for the trip to Jekyll Island. Before the break, Bob, we were talking about the possible outcomes of the Bilderberger meeting. I guess there were two things that Estlin spoke about. One, power to the World Health Organization and the IMF to become, obviously, the world's Federal Reserve System.
Yeah, he also spoke about differing opinions as to the course of the world recession, which they choose to call it. It's a depression is what it is. And whether they should attempt to cut it very short. But I don't see that they have any alternative to be able to do that. It's something that they're already doing, trying to cut the recession, depression short. That's why they're pouring all this money into the system. And in 22 months, it hasn't worked. And so I have to discount that because I don't think they have an easy way out.
Well, I think it was last week when your major insurers all went with hat in hand to get a part of the TARP funds. As a matter of fact, went running to the government for a $22 billion payout. Is there more than meets the eye with those insurers? I mean, these are the same people that issue annuities, aren't they?
Well, I spoke to this on the program about 3 months ago, and then again a couple of times since. And I've been telling people, particularly in these 6 insurers, which are all stock companies, the difference between the two is a mutual company is owned by the shareholders, and they're limited to using bonds in their portfolio, which have been relatively safe. I think there's going to be bond losses, but they're not going to be anything like the stock losses and the losses in other things, such as hedge funds and commercial buildings that they've purchased, illegal and illiquid investments. And so I think the mutual companies will be relatively safe, but the stock companies, no. And those 6 are stock companies. Any company, any insurance company that goes to the government for a handout is on the edge of going under. Otherwise, they wouldn't be looking for it, because the damage to them and their reputation is very, very harsh. And so they wouldn't ask unless they had to. And so with that said, if I had a policy with any of those 6 companies, I'd certainly terminate it. I'm talking about a life policy with cash value or an annuity. But all of the stock companies own stock in their portfolios of other companies. And they're guaranteeing 3 or 4 or 5% or whatever it is. They can get that changed. There is no guarantees. And don't think that there is.
So do you think
state laws in most states can change that. So with that said, people should be taking cash values out of their life policies, replacing it with level term insurance, which is far cheaper, doesn't build up the kind of cash value that life does, and annuities should be liquidated. And the money should go into gold and silver related assets. I've been doing it for months. And as it turns out, I've been proven right, because those insurance companies, and with the case of Hartford, they already got $1 billion from the state of Connecticut. I think they were asking for $2 billion more. And, you know, this is a humongous amount of money. So they're all in trouble.
So the money that they requested, in other words, what you're saying, was to meet redemptions.
No, I think it's to be used as operating capital as well as meet redemptions. But I think it's operating capital, their physical condition as an insurer. I think that's what the problem is.
And then we got, obviously, developments which obviously played out in the financial markets today, especially in the gold market and the dollar index, with a report that we got yesterday that China and Brazil have now entered into an agreement where they are going to trade goods and services in their own currencies and obviously not deal in the U.S. dollar, which in turn, I think today we had dollar index at 82.07, off 51. And
I get the outside month here, and it's off 60, 82.06. And that's coupled with the outside month yesterday, which was off 51. So it's off a little over a penny and an eighth in 2 days, and that's considerable. 82 gets broken, you're going to go to 78.
So would you say that obviously that story has had a ripple effect in the currency markets?
Right, and the deleveraging is still going on, but it's going on in a much smaller way than it had almost a year ago and then onward. And so deleveraging is not there anymore to hold the dollar up. And that's what made the dollar rally from 71.16. And I think it's going back down. Look at interest rates. During the day today, we had on the 2-year 0.92%. It closed at 0.89%, but that's still a long way from about 0.60 where it was. But the 10-year is the one I'm really interested in. When it was 235, I projected 350 by the end of this year on the yield side. It traded it last week at 336 intraday and had a 335 early on.